Did you know that over 40% of gig workers overpay their taxes by an average of $1,200 every year, not because they owe it, but because they don't know the rules? And in 2025, the IRS is tightening its grip on gig income with new reporting thresholds, expanded 1099 tracking, and AI-powered audits. So if you're a freelancer, Uber driver, content creator, or crypto trader, this video could save you thousands. So let's break it down. Welcome back to Tax and Tech Explained. I'm here to help US freelancers, digital nomads, and AI entrepreneurs decode the tax laws that actually matter, and today, we're walking through how to file your 2025 taxes early as a gig worker, step by step, from income tracking to deductions to deadlines, and by the end of this video, you'll know exactly what the IRS expects, how to stay compliant, and how to keep more of your money. So let's get into it. First, let's talk about why filing early matters more than ever, because in 2024, the IRS began phasing in stricter reporting requirements for payment platforms like Venmo, PayPal, and Cash App, and starting in 2025, any gig worker who earns over $5,000 through third-party platforms will receive a $1,099K form, and that threshold used to be $20,000. Now it's $5,000, and it's dropping further in 2026, which means the IRS now has more visibility into your income than ever before, and they're also using AI and machine learning to cross-reference your 1099s with your tax return, so if something doesn't match, you're flagged. And when you add to that the rise of crypto payments, AI-based freelance work, and OnlyFans-style creator income, you've got a tax landscape that's more complex and more scrutinized than it's ever been, which is why filing early gives you control, reduces errors, and gets you your refund faster. So now let's talk about how to actually do it. Before you file, you need to collect every form that reports your income, so here's what to look for. The 1099 NEC is for contract work, and if you made over $600 with a single client, they're required to send you this form. The 1099K is from payment platforms, and if you hit that $5,000 threshold, you'll get one. The 1099 MISC covers things like prizes, awards, or rent income, and the 1099 INT and 1099 DIV report interest and dividends from investments. And here's a pro tip: don't wait for these forms to arrive, because most platforms let you download them early from your account dashboard. And if you're a crypto trader or NFT seller, you'll also need transaction records from exchanges like Coinbase or Binance, because the IRS treats crypto as property, so every sale is a taxable event, and the bottom line is, no income form, no deduction, so get organized now. This next part is where gig workers leave the most money on the table, because if you're self-employed, you can deduct ordinary and necessary business expenses, and here's what qualifies. The home office deduction lets you deduct space if you use part of your home exclusively for work, either using the simplified method, which is $5 per square foot up to 300 square feet, or you can calculate actual expenses. Then there's mileage, because if you drive for Uber, DoorDash, or client meetings, you can track every mile at the 2025 IRS mileage rate of 70 cents per mile, plus equipment and software like laptops, cameras, editing tools, and AI subscriptions like ChatGPT Plus or Midjourney are all deductible, and so are marketing and advertising costs like social media ads, website hosting, and business cards. And if you're self-employed and pay for your own health insurance, you can deduct 100% of premiums. So keep receipts and use apps like QuickBooks Self-Employed or Keeper Tax to automate tracking, because remember, the IRS doesn't care how much you spent, they care if you can prove it. Here's the part most gig workers don't see coming. When you're self-employed, you pay both the employee and employer portion of Social Security and Medicare taxes, which is called self-employment tax, and it's 15.3% of your net income. So if you made $50,000 as a freelancer, you owe about $7,650 in self-employment tax before income tax. But here's the silver lining. You can deduct half of your self-employment tax when calculating your adjusted gross income, and if you made under $400 in net self-employment income, you don't owe self-employment tax at all, which is why tracking expenses is so critical, because the more deductions you claim, the lower your net income and the lower your tax bill. Most gig workers file using Schedule C, which is where you report profit or loss from a business, and you'll also file Schedule SE to calculate self-employment tax, and if you made estimated tax payments during the year, you'll report those too. So now the question is, should you file yourself or hire a pro, and if your income is straightforward with one or two 1099s and simple deductions? Software like TurboTax Self-Employed or Free Tax USA works fine, but if you're juggling crypto, multiple income streams, or cross-border payments, hire a CPA who specializes in freelancer taxes. And here's a key date. April 15th, 2026 is the deadline for 2025 taxes, but filing early in January or February gets you your refund faster and avoids the last-minute scramble. Now let's hit 5 critical IRS updates for 2025. First, the $5,000 $1,099K threshold is live, so if you earned over $5,000 through payment apps, you'll get a $1,099K and you need to plan accordingly. Second, crypto is under the microscope because the IRS now requires all exchanges to report transactions. So if you sold crypto in 2025, expect a 1099-B or 1099 MISC. Third, quarterly estimated taxes are mandatory, meaning if you expect to owe more than $1,000 in taxes, you must make quarterly payments or face penalties. Fourth, AI and automation income is taxable, so if you're using AI tools to generate income through copywriting, design, or coding, it's all reportable as self-employment income. And fifth, the IRS is hiring 87,000 new agents, which means audits are increasing especially for high earners and gig workers, so stay compliant. Here's what you should do today. First, download all your 1099 forms early and don't wait until February. Second, track every business expense using apps or spreadsheets because receipts matter. Third, set aside 25 to 30% of your income for taxes and open a separate savings account if you need to. And fourth, file early or consult a CPA because the sooner you file, the sooner you know where you stand. And remember that gig work gives you freedom, but freedom without structure is chaos, so these 4 steps give you control. So there you have it. File early, track everything, and know the rules, because in 2025, the IRS is watching closer than ever, but if you understand the system, you can use it to your advantage. And if this video helped you understand the tax law behind your gig income, hit that subscribe button because smart money needs smart rules, and drop a comment if you have questions because I read every one. Thanks for watching Tax and Tech Explained. Stay informed, stay compliant, and I'll see you in the next one.